Welcome everyone to the Kindle Report. Just want to give you guys a good job done. We got 1.5 thousand likes last night, so that's good. Got to keep it up, right? We'll see how we do tonight. Anyway, folks, welcome to the Kindle Report. Make sure you subscribe, hit the like button and the notification bell so you know when I come live. And I remember when I was overseas why I do live streams. It took me like 3.5 hours to do the video that I did. It was a terrible experience. So I appreciate everybody showing up and watching these live streams that I do every day. So let's talk about what happened on Monday, which was a huge down day, right? We're down 2.14 on the S&P, down 2.55 on the NASDAQ, and Russell down 2.13. So big numbers. And with no news, nothing out really, I guess you could, a lot of rhetoric around the 10-year going to over 3%. I can't see why that's a big deal. We were at 360 once, and now we're at 3%, but that was all they could find, I think. And the algos were picking up on everything. There was a lot of activity. We were in the live room earlier today, so we got to watch this thing real time, and there was just constant selling. There was never any real bid in the market. At the end of the day, we caught a little bid, but not much there. Just a quick mention, we did get an STX buy signal, so more on this in a little bit. Before we get into more of what I think is happening in this pattern, Tonight, I'm actually going to go into some reasonably in-depth Elliott pattern that's setting up here that I think is important to understand. And we'll go through that here shortly. I've got all the metrics already figured out here. So let's look. Tomorrow, we've got new home sales coming out, 580K. ISH manufacturing and services coming out. These are nothing numbers. They'll be out. I don't think anyone's going to be looking at anything. On the earnings side, we do have Dick's Sporting and Macy's, more retail. And retail's been a big issue, as you know. That's been where a lot of folks have been looking to weakness. And we're definitely getting some weakness to show up in the economy. There's no doubt. I've been talking about that. But I still will show you a pattern that I believe is unfolding. And we may have a little more correction than I thought originally was going to happen, but I'll set up the patterns and go through a fair amount of detail on what I think is going to happen here. So let's take, I guess a lot of folks are looking at AMC today, AMC with the apes and all that. They had big numbers down, but no one was adding in the people that owned AMC ahead of time. They also got the apes, right? So they're only down $2 from where they were on Friday, I think maybe $2 or $3. So it wasn't nearly the debacle that was promoted out on the street today. But anyway, the point is, I'm not sure why the markets were down like they were. If it was the 3% thing over on the 10-year, that's kind of lame in my opinion. Don't think there's a lot of teeth in that. I talked about last night, if you recall, of us going to 3.4, 3.05. So this was already in the cards from where I'm sitting. There was no surprises from my viewpoint. Just looking at a couple other notes here that I think are reasonable to talk about, and then we'll talk about the database. There's lots of information to talk about on the database tonight. Massive selling out of the database, pulling back into some of the levels. I'll go through the details here in a minute. Pulling back to some of the levels that I was talking about last night. And I guess the other thing, maybe from a international weakness, China's lowering yields pretty much across the board. They've still got a lot of things shut down, so they're just really pushing everything to try to make whatever little they've got going, slow down, trying to stop the bleeding, so to speak, in China. So we're definitely seeing some weakness over there, and I think that's got some folks concerned. I don't think that's ultimately going to be what cracks our market here. And so let's go ahead and let's get into the database. I'm looking at my notes here. Don't really have a lot more to say because there really wasn't much going on other than pure outright selling and no bid in the market whatsoever today. We watched a decline from 57 all the way down to the lows of 32 with virtually no bid. So I'll get into the database, and then we're going to go a bit into an Elliott view of the world from the standpoint on looking at the S&P. So let's go ahead and get into the database. Okay, folks, big numbers. We were at over 80% last night. We're at 69.89% here. I'm sorry, it's 69.09. We had 5,892 sell signals, 120 buys. So massive negative rotation going on here. What I was talking about last night, and this happens all the time, folks, if you watch this channel, I will mention a number and the next day it goes there. And this is exactly what happened. I said, I'm looking for the database to pull back to 68 to 62% bullishness. That's still a very big number. We still have 11,108 symbols that are actually long right now. So we'll see how this thing all plays out in the next couple of days. But this is still a very robust number. And this is the rotation that I was talking about that happens in the database. So this is a short-term database. The longer-term database, I still am very encouraged about. We're at 30% on the intermediate models. The holding period for, on average, on the short term is about 39 days. And with this big rotation, all of a sudden, the current is really, at the moment, is only 10.7 days. So we're really not looking at much of the duration's gone, but when you get a reset, when you get this many cells, it kind of changes all the dynamics of the database. Well, the thing that I want to just focus in on is that even if we get to 62%, that's still a very robust number. There's still a lot of symbols, a ton of them, 11,108 that we have in our database, which is a lot, that is still in uptrends. So we'll see, maybe that'll deteriorate a little more. Like it said, if we can hold 62%, then I'm still on board here with the pattern I'm about to show you when we go through the presentation on the technicals. I think is pretty solid based, and I'll go through it. I went through it in the trading room, so those of you that watch in trading room, hopefully I think I went through it in about 18 minutes. So I think I can get through this a little faster. I have all the metrics and the numbers and all that, but the database itself is getting that rotation, which is actually very healthy, because what happens is a lot of these symbols that come off are going to rotate back in, and so there's a rotation. And like I said, the expected duration is only about 39 trading days. That doesn't sound like a lot of days, but that's the better part of 2 months, is roughly 22 days a month in trading. So we'll continue to see this rotate here from this standpoint. I just don't think this is a material situation that's going on. So let's go ahead and let's dig into the technicals. Okay, so I'm going to use TradingView tonight because this will give me the ability to draw in a lot of these this pattern. So let's get the drawing tool out and let's go through the basic pattern that is unfolding here. And I'm going to start off just by drawing in this. I'm going to go through the trouble of even marking this up. So it's going to take me a few minutes, but it'll be something that will be hopefully be worth watching to go back again and see. So I'm just going to draw in the pattern, and I'm going to count them as we go. This is going to be wave 1. There's an ABC. This is going to be wave 2. And then we're going to get this pattern here, which is going to be a 5-wave pattern, and this is going to be, the top will be 3. I'm just going to draw in everything, and then I'll label it so we can have a handle on this. And I've got some metrics here that I will bring in as well. So right now we have this move that we got to today, and we have a couple things here. We've got the 200-day moving average over here, still declining a little bit. This is still going to be major resistance for the time being, but every day that goes by, the momentum on the downside is gradually starting to turn. So let me go in and label this so we can get an idea of what it looks like. And I'm going to take this to the fullest level here. We'll go here. This is going to be 1. This is 2. I'm not going to put the minor waves in, just a major here. This is going to be 3. And now I'm going to draw in this next sequence. And I'm going to also bring in some of the metrics that I think are going to be important to watch for. So a couple things happened today. We traded down to S3 on the weekly. I'm going to also go over to TradeStation, show you some of the metrics on the market grid from a weekly standpoint as well. But here's what I'm expecting that we're going to see happen here. Is we're likely to get a rally from here, maybe back toward the 200, which is 42.74. And then we get a pattern like this, and this is going to be our wave 4. And I'll show you a couple things here that I believe are going to happen. We're likely to get, then after this, a wave 5. So let me go ahead and just label this stuff real quick here. So this is going to be 4 and then 5, okay? So here's the expectation, as the patterns that are likely to unfold. I'm going to change some colors here just so you can see them easier. Is this level here is likely to be a two levels, 0.33 retracement down to this level, or a 0.382, which could set it just a little bit lower here. And I'll give you those numbers. In fact, I'll just go through and put them on screen. So 0.33 equals, let me make that bigger. .33 4101, and I'll just give you the number right now. The STX weekly is 4107. So you know I love these clustered numbers. 0.382, which is more of a typical, that's more of a GAN number here, but let's just take a look at this, suggest a move down to the 4060 level, which also maps out to the 10-week moving average. But those are your objectives to the downside. Now this wave 1 that I have over here is actually interesting because it's wave 1, the length equals 380. So this is definitely an extended wave. Let me just draw this in here. This wave 3 is extended. If we get this 4 set up, it might end up being even a complex. It might be an ABCX double 3, maybe a lot of different configurations. But this next move up, wave 5, is going to be equal here. So the scenario that we're looking at here is the scenario that we're looking at is going to be here, that length of 1 and length of 5 will be equal. So that suggests a couple things. If we go from 4101, then the objective on the upside here then is this. 4101 suggests that we're going to 4480. And sorry, that's if we, hang on one second here. I get it. This is, let me rewind this just a little bit. Sorry. So the target then for 5 will equal two targets, 44.48 and 44.80. So this still means not only will we likely exceed the 43.27 high that we printed, but we're probably going to go up to at least into this 44.80 to 44.48. So I wanted you to see this pattern. I'll take this off here, and we'll go back and do our normal analysis that we do here on the channel. Okay, so this is the weekly chart. There's something else I have here that I want to point out. As I talked about this last night, PPM1 on a weekly is 1.18 positive, and it's still expanding. That's not going to change much. PPM2 is negative, so we are trading down toward this 2 levels here. I want you to notice some of the numbers I just talked about. The 10-period moving average is 40.41. We just talked about it, a 0.382 target of 40.46. So we could extend down to this 10-period moving, 10-week moving average on the weekly chart. That is a very strong possibility. But this weekly signal that we have, typically the weekly signal lasts a minimum of 4 to 6 weeks. And they don't always work, but this is, right now we are in week number 3. We've got at least 2 more weeks. And with this rising 10 here at a 1.18, the probabilities on the probability map for the PPMs, those of you that have it probably saw this in the course when I was talking about this, but at this level, we're less than 10% probability that we're going to drop below that 40 level where it is right now. And that number is going up right at the moment about 50 handles per week. So that's going to be basically right at 4,100. So I'm going with that. Tomorrow is going to be very critical that we hold the 4107. Let me bring up the grid. So sorry to get into deep, but I think this is worth going into here because this is the big question here of where we're going. So we look at the STX 4108.25, and we have that 0.33 retracement at 4101. So we got that working. The extension down to the 10-period moving average 40.41. Like I said, it's going up roughly about 45. So it's going to be 40.80. So we basically are still above that level, but that is setting up the bottom or the floor of this market. And here's something that I didn't discuss here a minute ago and looking at the Elliott, is that whole 5-wave sequence could end up to be something even bigger, where that's wave 1 of a larger degree. I don't have that confidence to call that right now. Like I've said before, all we need to do is figure out what's tradable right now. And I'm going to flip over here to the daily chart just for a second so we can get some of those numbers. We did get the exit, the close under the 21 actually got a exit off of this trade. So the trade that came on over here at 38.78 actually exited on the open tonight. So we do have that. We no longer have a daily trade, but I think that's why we're in this corrective phase. And this is pretty good about finding this. So we did get the exit here on the daily, but that just sets up the tone for more of a correction. And that correction that I was drawing out a minute ago is something that could get very elongated from the standpoint of timing. So the timing is going to be tough. We could get an ABC like I drew in, maybe an X wave, another ABC. So there could be some serious consolidation between, we'll just call it 40.40 and maybe 4,200, or maybe up to around 42.40 40, somewhere in that range, just in round numbers, that we just get this sideways chop in here. And so with the, like I said, on the daily yesterday, we did get, you can see here, we closed well under. The STX was 41.76. We closed at 41. So we closed 30 some handles under there. We should see at least a couple of days of stable. We also have the market grid going into a box formation here, which also tells you that we're going to stay sideways. There's probably not a lot of upside potential here at the moment. And it makes sense if we look at what's going on from the standpoint of all of the metrics that are coming out, all the news that's coming out this week with GDP and Jackson Hole and all that. So this is definitely something that you want to pay attention to. So I wanted to go into more depth. I haven't went this deep into things. I will continue to evolve as we go through the next several weeks. It's really all about the database being at 69%. We'll see where it bottoms out at, whether it holds a 62, all of that. And ultimately, when we come into Friday, I think, you know, this looks like a lot, 2%. So what? When it comes to the bigger scheme of things, when we start looking at these weekly patterns, we're starting to see a lot of stocks starting to rotate in. So coming into this Friday, I realize it's, you know, Monday night, but when we come into this Friday and we get the metrics from the database, that's going to tell us a lot. If we continue to get traction, we'll see where we close on Friday. I think I tweeted out earlier today that I thought we were printing the lows for the week. I still think that. We've traded down to the extreme almost. 40, as I mentioned, 4101 is the STX on a weekly. If we just look at the market grid for today, we're looking at right now where the low is 43.53, so a pretty tight range. S1, 41.25, that would be a new low on what we did yesterday and then, or on Monday, and then our R1 is 41.56. We've almost printed that. I would look for maybe S1, R2. I think we will see some of a rebound based on that STX buy, but also just on, there was a lot happened yesterday, and in my opinion, not based on anything real from the standpoint of there wasn't really anything driving it. Like I said, if all they had was the 10-year trading over 3%, they were able to drive the narrative. And I mean, the algos were relentless on the selling today. There was no doubt that there was some serious stuff going on. But I think what we'll see here in the next couple of days is a stability, at least for the next couple day or two, probably coming into Wednesday. We're going to come into these metrics, GDP and all the other stuff that's coming out, and ultimately Jackson Hole on Friday. So there's plenty of stuff to kind of play out. And I'm not sure earnings are going to be in a big factor this week because we're really winding down the end of the earnings season. So let's go ahead and get into the NASDAQ. Okay, so I just want to say all of the analysis that I did there, we also have the exit on the NASDAQ trade. The NASDAQ trade came in at 12,076. We got an exit here at 12,933. So basically a 900-point trade on that. So very good trade. We hit some of the metrics on, like I talked about on the S&P at 4320. All this stuff hit. So good trade overall. But I want you to notice that on the dailies, we're already seeing the PPMs trying to turn back up. And PPM 2 is right at 0.21. PPM 3, 0.25. So we're in trend mode up. And the 12,594 is probably the bottom end of this pattern here. But like I said, you can take everything, the wave count and everything I just talked about is relevant to the NASDAQ as well. We should be able to get through the rest of this video fairly quick, but I wanted to go in depth on the patterns, the wave counts, and some of the expectations as I did. So Here's the RTY. All of these symbols exited the trade. A couple things happened. PPMs are below their first, second derivative on PPM 1 and 2. And this is actually version, what we call version 1.2 model. So we got the trigger close under the 21. I talk about this 21 being the primary demand line. And this goes to everything I just talked about. All of these markets, the NASDAQ, S&P, and the Russell, all could trade as low as their 40-period moving average here in this pattern. And I'll flip over to the weekly just for a second here. And the same kind of metrics, the 10-period moving average 1851. We're trading here at 1920, so we're a bit above that, but those are going to be virtually impenetrable numbers. So if you saw 1850, you saw the simple moving average from the standpoint of any of these indexes, that's a buying opportunity for sure if you see the 10-week, simple 10-week moving average getting hit. So next market we're looking at is the 10-year, and the 10-year did bounce up. Here we are. We went to 3.041 on a high. This is a weekly graph here. The metrics I talked about last night, R1, 305.3. So basically 305 is where we moved toward. And I talked about S1, 292 or so. We should stabilize here. And I think we'll see some flattening off. The PPM1 is a negative 0.69. PPM2 is at a plus 1.09. So that tells you 292 is that support line, which has the high level PPM value at a plus 1.09. So we should hold 92, that 305. Is it possible to extend up to an R2 here? I guess anything's possible. That'd be 3.125. That might cause some issues with some of the markets, but I don't think we're going to see that at the moment. And we do have fairly strong metrics, though, coming out of the dailies. And yesterday, we closed right at our RXT 304.30. We closed at 303.70, so just under that number. We actually printed at 304.1. So we almost we went right to RXT. And all these markets, I think when this happens, you get everything to go to the extremes like this. There's usually some pullback from these levels. So we'll see if we get back to 3% on that level. So if we go over and look at expectations, R1 305, that matches up with what I just talked about on the weekly. S1 302, and then S2 303. So look for 305, 3% level. And just very quickly here, I want to bounce over and we'll take a look at the yield curve. Yield curve flattened yesterday across the board on a lot of the metrics that I'm looking at. The 530s came in a little bit and the 1030s as well. I'm still not a big fan at the moment of just looking at the 210s. I don't think they're relevant on the bigger scheme of things. So here's the crude oil. Crude oil this is the daily. We're seeing a little bit of a bid come back in here, looking at 90.89. Yesterday, we did print down to that 86.28, high 91.01, went out at 90.36. Looking at today, we're following through a little bit, 91.24. I think we'll see a continuation of this pattern. There is some Fibonacci targets in here for a 93, 35, 96 on the upside. I'll flip this over to the weekly chart here. And this was the number I spent a fair amount of time talking about last night, was this 40-period moving average, 88.40. We did print a little bit, but we're going to continue to close above this level. And like I said, we're probably sandwiched between the 10-period moving average, 95.88 and 88.40. That's going to be the story, I think, for a number of weeks. We are seeing PPM starting to turn up, but there's still PPM1 is quite a bit into trend mode at minus 1.4. So that's going to be the COE 90. We'll call it 96. We'll just round it off. So 88, 96 is the range that you're going to be. If you recall, it was at one stage we were trading into this 95, 105. Now we're narrowing a little bit here. And I think also, for what it's worth, the selling of the reserves also stops here pretty quick. I believe on September 1, I see somebody mentioning that the Fed is going to increase their sales of securities, and that's fine. Listen, everybody knows that. All that stuff is priced in, I think. As far as the equity markets go, I think we're still kind of running a different course. I may change my tune, but I think with that 10-period moving average I showed you on the equities, there's very small, low probabilities, and that's what I always play, is the probabilities of the market actually being able to hold those levels. And that's why we're also here looking at this crude oil here at a plus 0.79 on the 40 on a weekly. The probabilities are very low that we're going to close under that. You can see going back the last month, we've spiked a little bit below that, but we come back and close on the week above that. So we're not likely to see closes below that level, at least until that were to weaken, and the opposite is happening. We're seeing acceleration. We're seeing a deceleration of the downward pressure on PPM1, but we're seeing all of the PPM2 and PPM3 actually accelerating to the upside. So this is looking at gold next. We're trading right back to the 200, toward the 200-day moving average, 1744. We printed 40 last, 52, 1752. This is the weekly. This is going to continue to be sandwiched here. 1779 on the upside is going to be the ceiling. On the downside, we should hold this 200, which is at the 1744 level. If we get below that, you can see S2 weekly, 39, 27, 16. And we have some downward projections here on that we met a number of weeks ago. It was 1682. We get down to 1696 here. But 1682 is a fib target 1, 1598, and 1547. With this strength that we're seeing, I'm not going to cover the Dow tonight, but the strength that I was talking about in the Dow and things that we're seeing, there's just no way that gold's going to do anything interesting. Final market we'll cover tonight is Bitcoin. Bitcoin just continues to waffle. You know, you would have thought we'd get hammered today with the way the equity market, especially NASDAQ, got hit. That correlation factor, I've talked about this for the last probably 6-8 weeks, that correlation seems to have been broken, and Bitcoin's acting more like a alternative asset than it has in the past. I just want to point out that the PPM1 is now positive on Bitcoin. And you can look at the PPM1 turning up here. It's at a plus 0.61. So 21,819. Market's going to want to get above that by the close on this coming Sunday. I know it's Monday night, a long ways from that. But we look at the metrics here. The low right now, 20,900. S1, 20,008. So we've already hit it S1. S2 extreme 20. We'll call it 2,100. And that would be the extreme for this week. Chances are we stay maybe holding S1, but this positive ppm we could see in R2 21.7. So I think that actually says something as well as from market sentiment. But like I said, the Bitcoin continues to actually defy gravity for a while now. There is certainly every element out there that said that we should have probably seen much lower prices, but in fact, it's just been stable. I'm looking here probably for the last 2 months plus. And that's going to continue, it looks like, just based on the technicals. We're seeing ppm3 turn up here, and also ppm2 is flat, but it's still very negative. So there's lots of resistance overhead. So there's no big rally coming, but it doesn't look like, because of the way that the ppm1 is situated, that we're going to see any downside, big downside. It's kind of basically more of the same, locked in this sideways range that we've been in for literally the last 2 months. Okay, folks, that's going to do it for tonight. Hopefully, you'll find this. You'll find the analysis on the Elliott stuff useful. Make sure you get those 1,000 likes again. We got to keep that up. And everybody did a great job. I think 1.5 thousand last night, so that's good. It just, like I said, it's free. Hit that thing and just go from there. So anyway, folks, have a great day trading tomorrow. We'll see you tomorrow night. And remember to subscribe, like, and share these videos.